The cedi is projected to end the year with a rate of depreciation of almost 5%. This will be far better than the 8.33 percentage points loss over the same period last year. Now, since January 2020, the cedi has lost 2.60% in value to the American greenback. What can we attribute to this latest forecast? Joining me via Zoom is Kari Mate, an economist with Data Bank Research. Great to have you this afternoon, Kari. So explain to us why we expect a slower rate of depreciation.
Well, thanks for having me, Daryl. And I think one of the most important contributors to the stability of the currency is last year, precisely in the fourth quarter of the year, the Bank of Ghana introduced the FX forward auctions. Now, what this does is to get the market to bid for a certain tenor, short-term tenor of FX to be delivered on the market at specified maturities, and they deposit cedi equivalent of that amount that they require. That has helped to guide the market as far as the exchange rate part is concerned, and that has helped to reduce the apprehension on the market. And so currently, the market is very expectant of a certain amount of exchange rate over every rolling 2 weeks, and that helps to anchor exchange rate expectations. But notwithstanding that, again, given the current COVID pandemic, what we have seen across the continent is that countries that depend significantly on one commodity, for instance, crude oil, and have suffered shocks, negative shocks to their prices, are suffering exchange rate volatility. But thankfully, with the case of Ghana, we are a bit more diversified in our exports revenue, but then increased concentration on gold inflows. Given these uncertain times and the safe haven appeal of gold is also helping our FX inflow. So we have a strong buffer to support the currency stability, hence the better performance of the cedi this year.
You make a mention of some internal factors or local factors. How about the external factors? For instance, how the U.S. economy is performing right now?
Well, yes, and it is also one that you cannot also discount because currently, over the past few weeks or so, at least a month or so, the US dollar has actually been on the back foot against global currencies, largely because, one, the rate of COVID infection keeps rising, and as at now, the main concern is the spate of increase among the children and the economically active group, and that's actually raising concerns about the economic outlook for the US. Then also the concerns about whether the November 2020 elections will go on as planned and elevating policy and political risk to that economy. So the US dollar is also taking a hit, and that is also helping our currency in this part of the world.
Okay, so this slow rate of depreciation is expected in the short to medium term, I suppose. How does this help us in this period of the COVID-19 pandemic? As I can imagine, once the pandemic is over, things are going to get back to normal, right? You're going to start importing once again, and that could also affect the cedi's performance.
Well, yes, you are very correct. And so at least in the short term, whilst things are stable, there are a number of benefits. For instance, the imported inflation, the exchange rate effect on prices of goods imported will be minimized. And so the rate of increase in price levels will also be contained. Then from the public sector or fiscal angle, the impact of a sharp depreciation on the currency on the government debt service burden will also be contained or minimized. So then government will not have to sacrifice a lot more of revenue to pay interest on foreign currency debt because the currency is stable. Having said that, I think one of the things, the benefit we can also gain from this COVID situation is that it caused us to increasingly look inwards for production of things we were initially importing. Now, into the medium term, if we get a handle on this domestic production, it should substitute imports and help us that in the times when the currency volatility returns, we would also have a domestic production substitute in order to cushion ourselves from higher prices.
Okay, and that's why I'm a bit skeptical, a bit, how should I say it, maybe a bit reluctant to be excited about this latest development. So let's look at the long term. So while we are making inroads within the short term, what should we be looking at in the long term?
Well, I am also not overly optimistic beyond the short term. But then I am cautious. I am also not overly pessimistic either, because the truth is the government, the Bank of Ghana has introduced certain measures into the system, the domestic FX market, that should anchor beyond the short-term currency stability or performance. I talked about the FX forward auctions, but they've also launched a platform that will allow for transparent trading of FX so that bids and offer prices can be seen by all parties engaged in an FX transaction. That should help price discovery and efficient pricing of the exchange rate. But then if you go beyond to look at the downside risks, it is important to also be cautious. And that's why you can't be overly optimistic, because we know the problems with the fiscal account, the fact that government is running elevated deficits, and that might cause some shocks to the currency beyond the short term. So we need to be very cautious, like you are saying.
Cautious optimism, that's the word, the expression I was looking for. Thanks very much indeed, Courage Martin, for your analysis as always. He's an economist with Data Bank Research. Always great to talk to you, Courage.
Pleasure.
Now,